It's November 21st, 2016. We're back. It's Monday. It's a short week here for traders. John, good afternoon.
Good afternoon, Andrew.
Okay, so you did the show this afternoon. They had you over at the board, and you were like, unusual activity in Facebook, and we've been on that since this podcast for like 2 weeks now, I guess, a week or so.
Well, yeah, and one of the reasons, Andrew, was, it broke. This one actually did break through the 200-day moving average. Amazon didn't. Amazon got down to it and then rebounded, and all those short puts that I put on and your call spreads worked out pretty darn well.
Oh, yeah.
You got to like that. Well, this one in Facebook, it got down to that 115, and I was just dumping puts like crazy, meaning folks
selling them
puts. They all went out worthless. Thank you very much. And then we saw this unusual activity in there today with the stock it was already up a little, but boy, did they come for these calls, Andrew. In Facebook, they were buying the 118s, then the 119s, then the 120s, then the 121s. It was just a feeding frenzy. And they're all the short-term weeklies that they were buying in there.
What's the What do you think the catalyst is, though?
I think it just got overdone, and people were, they were angry at Zuck for the fake news thing. He didn't initiate it, but apparently some people were penalizing him, thinking that that Facebook deserved some hate or whatever. But I think overall, one of the reasons these stocks got tapped, meaning that they were drawing out positions, is because they're so damn liquid. You can get into Facebook with millions of shares and out of Facebook with the same millions of shares without making too much of an impact, because one of the most liquid stocks on the planet. You look
makes
at
a big
Apple
difference. Sure.
Yeah, it does. I mean, there are some stocks where you got to work into them for weeks, but I mean, this one trades 25 million shares a day. It's a $100 stock, so do the math, folks. You can see a pretty nice in and out without impacting price too much. And I think that's what people were doing last week, Andrew. I think, as it went down to that 115 and then slammed a little through there and got back up, it wasn't but, a heartbeat through down to that 115, and then it just shot back up and, like I say, gave you another nice ride. Same thing in Apple. How about when Apple gets down last week, Andrew, and fills that gap that you and I talked about, right? But basically between 104.70 and 105.50, something like that, which was back in September 12th that it got that it gapped up. And as we said, nature abhors a vacuum, and chartists love to point to those gaps and say, that gap has to be filled. Well, it was filled, and once it was off to the races in Apple, too.
I like that whole liquidity thing, because, yeah, right, you could get millions of dollars in and millions of dollars out, like, without moving it. That's definitely part of what you want to consider. You also mentioned WLL. Whiting
Petroleum. Well, and this one's because we've got so much going on, Andrew, in the space ahead of next week, not this week, next week's OPEC meeting, because it's the 30th of November, folks, so it's not this week. But as they do every year, they have a meeting the last week in November. This year it happens to fall on Wednesday of next week, the 30th, in Vienna. We'll keep hearing rumblings about, we think they've got a deal to cut production. And Jeff Currie from Goldman Sachs was on the halftime report today.
Yeah, I saw that. The guy from Goldman. He's a good guy.
Yep. I like him, and I like his calls. I don't know if he's going to be right about part of his call, which is part of the thesis, long story short, folks, is this. He thinks if they can smash down, if OPEC can work and basically take the curve up so that the short term or the spot is higher than the futures, then the shale producers here in the United States, so let's just, for rough numbers today, say that the spot, they can get the spot up to 48 and that the futures are 45. You can't hedge out into the future at a lower price than the spot, you're stupid to do it. You should bring that to market, right? I mean, and his point is if they can invert that curve like that, which would be known as backwardation, if they can get it into backwardation instead of the normal, which is contango, higher in the further out rather than lower in the further out into the futures contracts, then if OPEC could do that, they could take the U.S. shale guys out of the game for a while, because shale guys need to, when they're pulling the oil out of the ground, they want to hedge at a higher price out into the future. If they can't get that, then they won't open up the wells except just to hit what's immediate and in the front of the curve, and instead they'll not tap the bigger deposits for much later, which plays into their game, their being OPEC's game. So I don't know that he'll be right about that.
Who, Currie? You think Currie? Well, so Currie's basically saying that OPEC's going to cooperate for once in their life?
Yeah, he thinks they could actually do that.
Good luck.
You know, Jeff, this is his, ballywick. This is what he does. We'll see if he's right. I have been on with a number of folks, including Mark Fisher, who thinks that that's a lot tougher to do than to talk about.
I haven't seen it once in I don't know how long. I mean, maybe the 70s and 80s. And then they started putting in those African nations in the OPEC, right? And none of them agree on anything. Ever. Like, I think Nigeria is part of OPEC.
And Saudi doesn't want to be the swing producer anymore. So, let's see. I think if they're not, and if that doesn't happen, Andrew, then I think they're not going to get this passed.
Well, it's a hell of a call. I mean, if it works, it's a hell of a call.
It's a bold call by Jeff.
All right,
and he's a very smart guy. And like I say, this is his ballywick. I'm just saying that's one of the reasons, though, Andrew, I think that Whiting was feeling some love today.
All right, so that's November 30th. We're putting that on our calendar.
Okay, cool.
For stuff to watch, or at least in advance. TWLO. What's up with that? We had that last week.
That one?
Yeah, I didn't get in on that. I didn't buy it.
All right.
I mean, I don't buy everything. I can't.
I did TWLO, and we knock on wood. Some of the folks out there, I love. If you want to be great, folks, help me out and give me crap on Twitter, because there's nothing that makes me want to do better with these than to have the haters out there rooting against us on it. This is the largest short on the New York Stock Exchange. Short is 63% of the float. So last week, Pete and I were on together. I think it might have been Tuesday or Wednesday, Andrew. I'm not sure which. But we were talking about it. And actually, I can tell you it was Wednesday the 16th. And I did Apple that day for the unusual activity, and Pete did TWLO.
Yeah, we had it on the podcast.
Mm-hmm.
For sure.
Take a look at that one today. TWLO had that very nice pop. And anybody who had those calls, as the stock screamed up to almost 39 today, was pretty happy camper. So if you're listening to the podcast for the first time, folks, two things you need to do and be aware of. One, if Andrew and I talk about a stock, we are long or short that equity. Two, take your profits quickly.
Oh, yeah.
Because one of the reasons people trade short-term options is they think they have some time-critical information, and when the thing moves, you want to take your profits. So just giving you some insight into what we do when we see that unusual activity. I mean, Encana, Andrew, was another energy play that I think we just did on the podcast maybe a little over a week ago.
ENCA, right?
Born some, ECA.
ECA. Yeah, ECA.
Yeah, it's a Canadian energy play. Can't remember if that was Thursday or when it was last week for sure, Andrew, but ECA, strong activity. Love that one, and it's paid off already.
Speaking of paid off, I'm kind of excited. Back to this theme.
Okay.
Remember Amazon was getting crushed last week?
Yeah.
I bought 5 contracts. It was an expensive contract. These are like $60 a contract. The 750s at the money out to June. All right. Then I pulled my nose and bought another 5, and then with great pain, and I think I screamed it into you in the side because you were in the office that day. I'm like, I'm doing more Amazon. I'm going down in flames with this thing if I do it. And you know what? Paid off. Now I get to buy whatever I want on Amazon this Christmas.
Nice.
So, and I'm still holding on 5. I still got 5 contracts left. I don't know. Do you think it goes back through 780?
Yes, I do.
Just
And
because of a Christmas thing and there's trucks everywhere.
Yeah,
I don't know.
There were a bunch of reasons that people, again, tapped Amazon, Apple, Facebook, and it had almost nothing to do with Donald
because Trump hates him. Trump hates Jeff Bezos.
Like Trump's going to do something to those guys.
Last on his list of stuff to do.
Yeah. Instead, there were folks that wanted to get out of bonds. That was pretty obvious. Folks that were dumping out of mutual funds. They were jumping into various very specific ETFs that gave them exposure to like regional banks. The KRE is an ETF that does that. The XLF into some of the biggest banks and so forth. And XLE, energy. So there were a lot of reasons people needed cash to get into other things because unless you are the Fed, you're not printing money at home and putting that money into the market. You're probably needing to sell something in order to do it. And most of us don't have all their money in cash, so you need to have some place to tap so that you can indeed jump in on these trades when they become available.
All right, short week here. We're going to maybe do 1 or 2 more podcasts before we're out for Thanksgiving.
Yep. We will indeed. So make sure you tell your friends that they can pick up the podcast on iTunes or through YouTube. And
leave comments. We love comments.
Yeah, leave comments, especially if you want to tell me how dumb I am for picking some stock like Apple or Facebook. Make sure you do that because I enjoy those.
They hate us. All right, man. I'll see you tomorrow.
Later. I hope you guys make a lot of money. Take care.
All right, bye.